What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content. Good morning, everybody. Welcome back. Happy Monday to you. Let me just switch my camera. There we go. Hope you guys are doing well. We have got a little bit of a bounce going on in markets here following the Friday sell-off that we saw. Nasdaq at one point was down 5% or so. We are recapturing some of those losses right there at support. So far, big response from the bulls here, right around this 28,800 level or so. It was our first line in the sand bull zone, right? We've got it marked up here and clearly seeing a little bit of a response so far from the bulls. The question is this going right back through those highs and going to continue the unending melt up, or is this a bounce before some kind of continuation of the pullback that we saw on Friday? You know, are we looking at a market that has flushed out all of the euphoria really quick? I would argue probably not. Like, I would think you probably have a little bit more room to pull back. However, this market is also in feverish mode where it just does not want to stay down at all. So, you know, again, you have at least seen a retest of some support here. I think, you know, being patient, waiting for those longs at this level here, if you were looking to get long, was a better, you know, clearly hindsight bias, a clearly better spot than trying to buy it up here at the highs. But you've had the VIX sort of cool off a little bit today, big spike on Friday. The question is this it, right? A lot of times we see the VIX do this, where it does this and then does this, right? Where it kind of cools off for a second and then rips higher here. And I'm kind of hoping for, personally, I know that's not the right word, but I'm looking for a little bit more downside in the market. I'm not short. I'm just pointing out that I would not mind some larger scale pullbacks on some stocks that I like. And I also think that if the AI trade is going to, if the AI trade, the AI hype is going to stay alive, you probably want it to have healthy pullbacks. Like the semiconductors ETF, back up 4.5% today. The question is, you know, is that it? Is that all the pullback we're going to get? Granted, it was a decent pullback on a percentage basis, 11%. But oftentimes we do see in, you know, even within the context of very strong markets, semis pulling back 15 to 30%. So 30%, by the way, that puts us here. And that looks scary, but it's still kind of just a pullback within the context of an uptrend. So this week we have the consumer price index number coming out, the producer price index. We have inflation stats coming in, and that could drastically impact all markets, whether you watch precious metals, Nasdaq, S&P, currencies. CPI will have a big effect. It will cause some serious market moves. At the same time, you know, the dollar has been really strong. We've been pushing back towards these prior highs. We hit that 100 idea. We've talked about that for a while. We've made our way all the way up to 100 on the DXY here. The question is, again, how does CPI play out this week? Last week, we had really strong jobs numbers that kind of impressed markets and sent us here higher. We looked at our macro heat map, and this has been a really solid call. Just following the macro here has been a very simple way to kind of be on the right side of the dollar recently, which is, and the nice thing here is it's been very leading in the sense that we have seen bullish macro scores on Edge Finder here going as far back as May 15th. So the first time we got a bullish reading on Edge Finder for DXY is May 15th. That puts you right here. So this is the day that Edge Finder's macro screen went bullish for the dollar. Now, of course, we jumped higher and then kind of stayed there for a little bit and jumped higher again. So right now, the flow here for me on the dollar index continues to be up until proven otherwise. So if we get DXY, pulling back sharply on CPI and something changes within our calculation here, again, I'm just going to follow the flow here because it's been very accurate to just follow the macro score. So with that said, what could change here? Well, if CPI this week came in much lower than expected, I think we're expecting 4.3, if I'm correct. It's either 4.2 or 4.3, I think. But let's say inflation only jumps to 4 or it stays at 3.9, for example, the market would certainly be happier with that than a 4.2 or 4.3% reading. So if you have a situation in which inflation is jumping more so than expected, however, then prep for DXY breaking through 100.5. That would be my base case here, is if you get like a 4.4% reading on inflation, let's say CPI, you're probably going to test the breakout here that we have been back to here. Because at that point, you're talking hot inflation, decent economic growth versus expectations, and jobs data coming in stronger than expected. 4.2 is expected. Okay, thank you. Yeah, so we'll see. We'll see how CPI plays out. Of course, that is Wednesday. Stocks, of course, would like to see inflation stay at bay. If you get stocks or if you get inflation breaking ranks here and really getting up into the mid fours, if we got a 4.3, 4.4% reading, higher than what the market is thinking we could get, that ultimately, that level here that we are currently finding support at could break. So I am still kind of in the cautious to neutral stance when it comes to stocks. I have no positions open in regards to index longs or shorts. Nasdaq sitting at a +2 reading for me on Edge Finder. We're not decisively bullish or bearish at this time. Gold is getting a -6 reading, or -7 on fundamentals, which is very interesting. Inflation's hot, at least the last round of it. This could change, right? So there is a little bit of subject to change here. But you have inflation, very bearish readings for gold, right? Inflation has been ticking higher. That always confuses people. They say, wait, how can inflation going up be considered bearish for precious metals? Well, remember that inflation rising tends to make this, you're looking at money supply looking backwards, right? You're saying, oh my gosh, the money supply grew a bunch. Okay, well then what are the Fed, central banks around the world, what are they going to do in response? They're going to close up the register. They're going to stop printing as much if they can, right? And so that concept suddenly issues or evokes a response from central banks that is typically stronger for the underlying currency, especially when the economy of that currency is doing okay as is. So when we look at the US, right, PMIs, which are forward-looking indicators of the economy, this is essentially a poll of asking experts in their respective fields what they're doing about hiring, what they're purchasing, what their sales are looking like, what their orders projections are looking like. You ask these people within the services and manufacturing components of our economy what they are thinking about, and it's a forward-looking indicator. It's not forward-looking, by the way, does not guarantee it is correct. It's just a forward-looking indication of what is likely happening. Manufacturing and services PMIs beat expectations very handsomely, very nice outperformance there. So those are good readings for economic growth. Jobs data came in really solid last week. So I'm not saying, economy is perfect. I'm saying it's coming in better than what forecasts had been for. So the economy seems to be holding up okay. Inflation is sticky at the same time. Those two variables kind of lean in the direction of dollar strength. So you have potential dollar strength. You have all of that to say interest rates staying elevated. That is an environment where gold and silver don't typically thrive. What do we want to see? If you're a gold bull, what do you want to see in the data? You want to see inflation cooling dramatically, preferably because the economy is hurting. That dynamic is a sweet spot for gold, because think about it, right? If jobs are bad and inflation is down, what does the Fed do to try and help this? And let's say growth is down. Like, when all of these things are doing bad, what does the Fed do in response? Does anybody know? Historically speaking, what does the Fed do? Jobs are bad. Inflation is down. Now, this is not our scenario. I'm just saying, picture this scenario. What does the Fed do? They print like crazy. They print money. Why? They print money. They throw it out there so that, they can do so because inflation's low. They're like, okay, that's not a worry. We print money to try and get growth and jobs back. We need jobs and growth back. Like, if this scenario, again, I want to reiterate, because if someone just joined, this is not the scenario that we are currently in. I'm pointing out what a bull case for gold would look like. By the way, this is 2024 and 2025, right? Jobs were slowing, inflation was under control, or mostly moving in the direction of under control, and growth was kind of cooling off. That was the 2024, 2025 environment that sent gold skyrocketing. This scenario, at least right now, is not the case. It's actually kind of the opposite. So let me show you. Here in 2026 land, if you're watching the macro, if you're watching gold and dollar, how are jobs holding up? Well, they're actually improving more than people had expected they would recently. We've had 3 back-to-back jobs reports number that were better than expected. Next, inflation. Inflation is back on the rise. Not great for gold, not great for silver, strong for dollar. And growth is, I would say, flat to slightly up. So the opposite scenario is happening right now. That's why gold and silver are down, right? That would be my core posit claim on why I think gold and silver are no longer as shiny as they maybe were last year. Now, again, I'm not a hater of gold and silver. I like them for the long term. I think if you're an investor, personally, these types of environments are times where you actually look at gold and silver a little differently from a longer term perspective, right? The contrarian view would be all of these things are sending gold lower prices, very nice. I can buy them low and wait for a day where I think things will change. Okay, that's a different perspective, not a trader's perspective. A trader's perspective is to go with the trend, right? The trend based on the macro trend, is down. Not to mention, you have geopolitical shocks in the system right now that are sending oil, to highest levels that we've seen in a couple of years. That's inflationary. That hurts growth if it stays there. So that's my point, is macro trends are king. They're dominant. If you can understand the macro trends, right, you can play the big moves. And that's what we've tried to do on this channel. That's what I try and do in my trading. It doesn't mean I get it right all the time. I certainly don't. Nobody does. Any hotshot who thinks they know what the market's going to do all the time, hey, be my guest to give it a shot. Try starting a YouTube channel and talking about it every day, and we'll see how perfect you really are, right? Like, it's easy to claim. It's hard to actually do. I'm wrong often, and it's okay, because at the end of the day, trading is not about being right all the time. If it were about being right all the time, there would just simply be no profitable traders, because no one is right all the time. Everyone is wrong on ideas. The difference is, how do you manage it when you're right, or how do you manage it when you're wrong? Nasdaq here's open up in 15 minutes. We've got the stock market opening up. You have a pretty solid bounce starting here. US stock market open will be interesting. Are we going to recapture 100% of the losses on Friday? We were down 5% or so. A rally back in NAS would be a 5.6% rally. If you drop down to the intraday, the 30-minute chart here, the 15-minute chart, they look aggressive. They look strong here for now. I think that if you're watching this, if you're a technical kind of day trader, if you're trading like NQs, if you're a futures person out there, if you were to get the pullback into this area, this is your question mark spot, in my opinion. Meaning, if you get the intraday pullback, you come down to this area. If you fail, not great. If you hold, that starts to look very constructive, right? Iran peace talks again, once again pumped it. Yeah, I mean, somebody commented on my YouTube channel, I think like 3 p.m. on Sunday, saying, get ready. Like, here comes the good news tweet within an hour or two before the market opens up. And sure enough. However, there's still a lot of uncertainty within the Middle East right now. There was all sorts of stuff that went down this weekend. Again, we come back to our chart, the prove it chart, which is oil, and you say oil's at 92 still. Like, the market is still looking at this and saying, there's no pen to paper, right? Until you see pen to paper. If you do see pen to paper, like if we finalize something, oil will be the first one to tell you, because oil will drop like a rock when that happens. Or if that happens, I don't know when. I'm not making a claim on that. Again, I'm wise enough through painful learned lessons not to try and predict every single thing that's going to happen with geopolitics. I think we have been validated in some way with the thesis or idea of not thinking that's going to be a quick resolution. I think that has come to pass. Like, we saw several times, like end of the war is 2 weeks away. We saw that from like the beginning, right? It's not happened yet. Maybe it will. I don't know when, but I do think that, oil here, staying here, continues to be a potential drag on growth at some point, and an inflationary thing. So again, as long as the Middle East stuff is happening and oil prices are elevated, I think dollar stays strong, yields stay elevated. That's kind of my base case for now. Precious metals lower, yields higher, dollar higher. Stocks, I'm kind of more on the cautious stance of, but again, I don't have enough of a short bias to actually bet against stocks. That has alternated a little bit back and forth. I was looking at possible shorts, but the growth metrics coming in better than expected, I'm not going to short them. Just not the, for me to short stocks, I need a really good synergy across all my stuff. And I just don't have that right now. So no trades on NAS or S&P for the time being. So yeah, we'll continue to keep an eye on that in case something changes. Dow Jones is actually getting a positive reading, which is interesting. What is going on here? Look at this. Oh my goodness, guys. Commitment of traders data showed a huge rotation into the Dow. Okay. Very interesting. Let me take a look. I haven't looked at the COT report. Wow. Okay. So things that they bought on the latest COT report. Dow Jones saw some pretty big accumulation. That's our biggest winner. Gold. They added gold. Decreased short contracts, added long contracts. US dollar They also added longs, decreased shorts. Euro, they bought. Silver, added longs, decreased shorts. British pound, decreased longs and significantly decreased shorts. Let's see. On the flip side, they got more bearish on Nasdaq, added significant more shorts, added significant more shorts to SPX. So kind of a mixed bag here because you have Dow and Russell's like right in the middle flat. So Dow Jones, they got more bullish. They rotated, it seems like, out of NASDAQ and out of SPX and into Dow Jones. That is the latest COT on the indices type of thing. Precious metals, they added gold, they added silver, but they also added dollar long exposure pretty significantly as well. So we'll see. We will see. Again, U.S. stock market open up in 9 minutes. We'll see what kind of impact that has. Gold is back to flat on the day. Silver, I am still short silver. I do still have my position open. Plan is, I need to do this. I'll do it after stream. Plan is to trail my stop loss a little bit tighter. Just lock in some more gains on it. I'm going to put my stop right here. So I will update that shortly. But the silver position still looks good. I still like silver shorts, despite institutional data showing a little bit of accumulation there. I'm going to stay in my silver short position. Crowd sentiment did get, I think in the short term here, I actually do think you probably see the bounce hold for a little bit on precious metals. We'll see if it might completely reverse. If it does, I'll take my profits. But crowd sentiment giving us a bullish signal. What is that all about? Well, let's take a look at what our crowd sentiment indicators are telling us about the precious metals. So if I go put call ratio, first and foremost, if you watch the Sunday video, we talked about a bounce being likely on SPX today, simply because of the offsides positioning that we saw from retail. So crowd sentiment poured into buying puts on SPX on Friday. So in the short term, typically it's so frequently the case. You get these big surges in put or call volume. The following day or two, you get kind of a capitulation the other direction, right? So everybody rushed the put side on SPX. So if you have kind of a bounce or two for like a day or two on the SPX, that really hurts all the people who rushed the put buying side of things. Same thing for silver. So silver, we saw a big surge in bearish action from crowd sentiment on Friday. So while I am still also short silver, people seem to have chased the short idea on Friday's trading action. So crowd sentiment was buying puts in there, chasing that down, down the move here. So as I look at this with silver, that kind of gives me like, okay, yeah, you could very well see a little bit of a bounce and kind of scare out all the weak short hands on there. Now, again, let me express that I am short silver, but as always, I have no certainty to where the price is going to go. And I know I say this all the time, but it's because so many traders are going around and they don't know any better. They act like they know, they have like some really solid idea of what's going to happen with silver. In the short term, I have no idea with certainty what's going to happen. I generally think silver is going to move lower, but if I am so dead wrong, I have to be prepared for that. Because here's the thing, if you don't, like if you're kind of like ignorantly thinking like what price is going to do, and many people have been there, I've certainly been there in the past, many people believe strongly they know what price is going to do. People who actually make money in markets do not. They understand you can't know. You can make educated guesses, and educated guesses don't mean, oh yeah, I don't know all the time, but I'm right like 90%. No. 55%. If you can get it on a one-to-one basis, 55% right, you're doing fantastic. It's hard to make calls in terms of what's going to happen because you don't know when Trump's going to say something. You don't know when the CPI is going to significantly go up more than expected or something like that. You can't predict everything, right? You simply cannot. Embrace that you don't know everything, and you will be a better trader. I promise you. I've interviewed many successful traders. I have many successful trading friends in my own experience. Absolutely no one that I know for a fact is a very consistently profitable trader claims to know what the market's going to do all the time. The only people who do that are fake gurus and traders who have not yet reached profitability. Profitability is educated guesswork with risk management. That's it. And a system that has been back tested and generally makes a little bit more than it loses. And you just keep doing it every single day. So yes, silver could move all the way against me and stop me out. And I would take profits and I would move on to the next because I don't know how every trade is going to play out. I generally think my educated guess is that if you get a bounce on silver, sellers will likely come in and continue to push it lower. If I'm wrong, distinct possibility, I cut the trade, I take profits, I move on. That's it. It has to be that binary. It has to be strictly reactive. It cannot be so predictive, because you know what that does? If you believe you know what's going to happen, like if you're like, I know silver is going to go down right now, it's going to keep going, then what you're going to do is you're going to put stupid position sizing on. And then what I said a second ago, that possibility is going to happen to you at some point and you're going to blow up. Are we making sense there? Give me a 1 in the chat if that logic made sense. Give me a 1 in the chat if you're getting that concept. Again, that was like a huge breakthrough for me in trading, is simply understanding I'm not God. I have no idea where this chart's going to go with certainty. I think it's going to do something, but I don't know. So let me size to reflect that. Let me not risk 50% of my account if this thing flies against me, right? Stupidity. Being a dumb A is what helped me to learn to be a better trader, okay? Learning, just reacting and being like, that was stupid. Don't do that again. You don't know what's going to happen with certainty. Anyone who acts like they does is either lying or a fool, and that is it. Anyways, a little light subject for your Monday morning. I'm 2 coffees in, so bear with me here. Anyways, stocks, I would love to see them come lower. This market is so incredibly unwilling to go down that I would not be shocked at all if we rip through the highs. I would love a larger pullback. I could get more constructive on a larger pullback. I've not done anything with the pullback here. Let's be fair. This is a racing 16 days. Like we're only 2 weeks back of a pullback. It's really a very minor one on the S&P, 3.6. I think after such a tremendous run up, very often big up moves are followed by big down moves. So I think a 6 to 8% move down in the S&P 500 is a longer term buyable dip for me personally. Like I'd be willing to add some shares to stocks that I like for the longer term there. From a short-term trading perspective, if I was bullish, the NAS and S&P 500, like if I liked the data a little bit more right now, yeah, I'd probably take a stab at longs here, but I don't. So I don't have any trade there. I'm not willing to short it. I'm just looking for a larger, from a short-term trading perspective, I'd like to see my indicators give me a little bit more confluence on stocks. So I don't have anything here. I've got to wait for that. I'm going to stick to my system. That's the other thing. I know I'm talking a lot of trading psychology and conceptual stuff today. Having a systematic process is also critical because I have like a binary, do this, do that. Like I don't have to think so hard about like, should I be long gold? Should I be short gold? Should I be buying the dip right now in Nasdaq? What if it keeps going? Like the clarity that comes from the work put into a software like this, right? Dow Jones, pull it up. Okay, check the chart. Is it at a level that I like? Well, let me get some fibs going here. Swing low to swing high. This would be kind of a really nice level if we were to get a pullback here. So if I get my zones out, that 38.2 looks really nice. So whoops, wrong template. Like the Dow Jones, I'm going to try and be patient there. I think if you're very bullish on Dow, you could maybe be looking at this. So like if I'm on a 4-hour chart perspective, you've got this level here. I've got this level here. And there's kind of something going on here, but I wouldn't mind if you were to see a little bit sharper of a pullback into some of these areas. Then maybe there is a calculated long trade that I could take here. I really like this level, right? This level here. So I could potentially put a stop right there, and I could maybe trade the continued rotation trade. I think that very well could be a thing. But I'm not going to chase it here. I don't have a nice, like, look at my risk reward here. Like if I'm anticipating back to highs, I've got to put a stop there. I don't love that setup. So if I map this out a little bit differently, could I take a stab long Dow here? And then, maybe if that trade doesn't work out, I reset and consider this area. Could that be a trade? Maybe, right? So yeah, I like to wait for levels to come to me. If they don't come to me, then I just on to the next. Hope that makes sense. I mean, of the indices right now, I do actually like the Dow more. I think that the tech stuff is very, very high risk. I think the concentration concerns are very real in NAS. So I would love to see a little bit of the enthusiasm get squeezed out. Again, I like them, but I would like the risk reward if you actually gave pullbacks. But if you don't get pullbacks, then, I just don't want to get caught up in the chasing the highs kind of thing. So that's my take on it. Guys, we have Yen Man up next. Ivan is going to be taking a look at some currency setups, talking dollar, talking yen, talking, of course, all the various markets. Before we do that, just as a reminder, we are currently doing a discount on our VIP membership group. So, just real quick, I did actually take profits on the pound dollar short position on my first half. So I ended up getting taken out. I know you can't see it on this, but my levels are off. I did actually get taken out of my pound dollar short position, part 1, and part 2 is still pending. So I am looking pretty good on pound dollar shorts for now. I do think that pound dollar continues to move lower. We'll see if we can get that move that I'm looking for down to this like 1.32 level or so. So I am watching pound dollar continuations to the downside. I am still short silver inside of the VIP room. So we will update. We're reacting to this level. If we can break through that, I think you have more flush to the downside on silver. I do like the macro bearish setup. So if it bounces strongly, though, like I said, I'll take profits on the move, and I'll update you guys inside of the Discord if you are not already in there. Again, all trades that I take are shared inside of the Discord server. If you are interested in getting set up with those alerts sent to you, right? So here's my pound dollar short position, my silver short position. All of the trades that I am taking are shared inside of the VIP Discord. If that is something that you're interested in, if you would like to set up a payment plan, if you would like to explore the different membership options, contact us using the link that just got dropped in the live stream chat. Let us know, because for a very limited time, we are currently doing 40% off of our memberships. So if you want access to our lifetime VIP group for 40% off, it is a super low price relative to what it usually is. You can also set up a payment plan with a member of our team. So don't miss it. Take advantage. Come join us in the room and come trade with us. We've been super busy and we're kind of on fire here recently. I know Marco also, he was sharing he also was short pound dollar. I believe he took profit on that one as well. So really nice. Yeah, plus 1.46% for him. Very nice trade. So we'll see where we go next with it. But come join us. Discord is currently 40% off. So get in on the action. Up next, guys, we have got Ivan taking over the stream just after this quick break. Check him out. Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.
Good morning. I thought I would bring some normalcy because, Nick just decided to, we have all profits. And yeah, some weeks ago. Friday was a bit of a strange one because I was in profit. And then NFP came out. And then, boom! Well, it didn't hurt me. Okay, it hurt a bit. It hurt me big. But that doesn't mean that this week is going to be messed up. And I was asked earlier today, I think it was Max who asked me, hope you survived last Friday. And I replied back, my account or my ego. So yeah, my ego took a hit. And then we had a weekly planning meeting yesterday. I think that was pretty all right. I still need to have this one on because I need to, keep that. But I said we're gonna go to 117. So what changed? Without were you just wrong or were you wrong? How could you be so wrong? You should have known. One thing that did happen was the re-escalation of the war. I'm not saying that as I'm not trying to say that that is the reason why it failed. Should never have taken the trade. I probably would have taken the trade 10 times out of 10 times if I was given the opportunity again. But and then the risky part of it was probably the NFP, and my plan said, funnily enough, it said to be out on 6th of June. And that was 5th of June. So I think I've learned to not, even though if I'm just in break even, I hate break even trades when you haven't really given a direction because it's an emotional exit. But I think that's a lesson for this year is you may need to be out because of lack of volume. Because now we're getting less and less volume, we're getting less and less trends. Yes, we have been in a range, we should have been higher. And I guess because we have the re-escalation and we have the higher CPI and we have the higher PPI and we have the higher jobs data, that it is inevitable that we are going to have a rate hike soon. And that creates dollar strength. I understand. So that's kind of not necessarily what I'm wrong about, but not to, divert from taking accountability. I took trades for myself, did it with the reasons I did, and then we can say, okay, what should you do next time differently? Probably not hold through NFP because that was 120 so pips on your dollar lower. Okay, cool. I don't want to be a part of that on a general scale. On the flip side, I could have been happy if it went to the opposite side. Would have been done differently. I could then. And I am back. I don't know what happened. You just said that something went wrong. So radio check 1, 2, 3. Rip. Okay, let's continue. So the question is, it's about probabilities. The probabilities let me into this trade, and it's going to lead me into the trades again. And unfortunately, my Aussie dollar that had 100% probability to go into profit didn't do it. So okay, cool. We'll be one experience richer. So what do I do this week? My seasonality, the direction for dollar is bullish. We have seen kind of some insight to what the open is, and it gapped a bit lower. We had a new lower low down to 115, and then skyrocketed it up. We have ECB on Thursday where they're going to hike. It's already priced in. So my question then is, and I think I said yesterday, this week is a 50-50 week. It could go either way. And I also said that this move, there was something greater than just NFP. And if you read the ING letter, or for that matter, talking to someone in the community, they said it can also be because of the impulse or the influx of liquidity because the IPO is coming out. Where SpaceX, I'm not 100% on this, but SpaceX is creating a new company, going into nuclear or something. Don't quote me, but somewhere in that direction. And I saw that Norwegian Oil Fund also said they had to be buying into that as well, allegedly and apparently. So that could be influx into dollar strength, and that is just temporarily. But at the end of the day, fundamentals are still higher. We still have the re-escalation. They have been doing whatever to each other today. We see no hope of ending. The problem that I've said the whole time is whenever we get, and the clue is President Donald Trump wants this to end and other parties doesn't want it to end, so we end up in a roller coaster. And market sends dollar much more bearish on a chance of a hike, a chance of a ending, than it re-escalating. So the question then is, because I'm saying you have a de-escalation risk, and then you have the fundamental risk. One is dollar bearish, one is dollar bullish. Which one are you going to go with? And I said this week is 50-50 in my interpretation of the week. And I would say like Nick, if it comes up to the level of, and I yesterday said 116, I think that's a bit high, but if we come out higher, then we could look for a short. But for those who have a very keen eye, and you know me more than you can know, and then you know yourself, is that that's a range. And how does I've been doing the ranges? Oh, I love them like a pile of dirt. The reason for why I love ranges is the simplicity of the ranges. Is that when you have identified a range, you're always going to say that, oh, it's going to hold forever. Yay. So when it breaks higher, you buy it, right? And it never, ever, ever breaks on you, which is my experience always. So kind of you have your range here and you think, okay, that's great. Let's break. Let's go higher. This case, it actually went higher, but I also experienced a lot of times that happening. So if I'm cautious, I'm cautious. I'm sorry. You're a cat. Very good. I will look into it. Because that's another one that is definitely a de-escalation trade that I'm looking into. Rabies, you said that it's crazy how rich I'm thinking about it. What do you think about it? Can you give me like a bit of a story? Because I could just see one-on-one message from you. Yeah, and I love that we are so technologically advanced. At the same time, it beats me. We almost came down here again. Okay, all right. So what happened in CAD was Canadian printed a much better than expected jobs number, and dollar came in stronger. Euro fell like a ton of bricks, and we are back into some kind of normalcy-ish range. And how I like to trade is not necessarily how this is set up, but generally that's a buy and that's a buy. And there is no chance we're able to get that price because of spread at the open. Am I saying that we're going to go higher? I mean, why not? But with the, what do you call it in English? With the steps higher and then elevate lower or lift lower, my spirit is generally crushed. There is no real reversal here. So to me, it's not necessarily that we're going to go lower from here, but I see it as a 50-50 market. And in a 50-50 market, do I have competitive advantage to go around in 50-50 markets? No, sir. No, sir. So for me, I mean, you can always put a trade on, but it's more gambling than actual trading. Oh, okay. Okay. Cool. Hello, Evan. Do you think dollar yen will go lower from here? GXY is at support, while DXY is at resistance. Now, I am of the cold-blooded theory, and since I'm the yen man, we can do a yen man update. Where I believe dollar yen is going to continue higher until something fundamentally breaks. Yes, we had a bit of a fall today. That doesn't really matter in the grand scheme of things because yen is weak and will continue to be weak, even though you feel like, oh, this is a low. We shouldn't go lower, should we? We haven't been as low as ever. Cool. I agree. I can see that. But as we are core believers of trend, and whenever the trend tells you something, is going to continue until the market fundamentals, seasonality, sentiment, or the federals or the central bank, which has tried a couple of times already, to tell you otherwise. What could make this one go lower? Would be a rate hike. That could be plausible. For yen, so yen would be lower or poor U.S. economic performance, meaning lower inflation, lower GDP, lower NFP, lower CPI, lower PPI, lower PCE. We haven't seen that. We have seen them coming out quite strong. So no. In as much as I want to, there is not enough, because this is the same situation I feel like we are in that we were in back in 2024, where dollar yen just get beaten down by interventions by Bank of Japan time and time again, and then it goes back up higher anyways, and then eventually it turned around when, yes, they did a rate check and yes, they did an intervention. But also what more importantly happened for a dollar around this time of year was that we started to price in lower inflation, lower rates. So if you put that, and that is about July 2024, and you go to the dollar index to about 2024, and you see, you see dollar also falling in the same time space, then yeah, that is a key important to why dollar yen fell, not just yen strengthening itself. So you need a complete shift in your dollar composition, in your dollar fundamental composition for it to go lower permanently. In anything else is just a pullback and short-term volatility. Sorry. Look who is here. Fatty is here. There's an ETF for IPO which underperform all other ETFs. Okay. Do you think Ward and the new Fed chair would set a rate expectation at the FOMC meeting on 17th? What kind of goes through my mind is how bold is an American? Because you want to put your, how much of a stamp does it wants to put on it? Because as a Norwegian, you're like, let's do the first meeting and see what happens, kind of a thing. We will get warm into the seat before we start doing anything. So that's kind of what first goes through my head. And I understand him as a dove, but also level-headed. So I wouldn't be surprised that he's hawkish, given the fundamentals, given the reasons for what has been leading the FOMC for such a long time. So if he understands the culture and the understanding and the core beliefs of the institution, then I would argue that he should come out hawkish. Should he be talking, or should he be talking about future rates? As I hope for his own case, he doesn't. And I hope he doesn't, because then there's gonna be a much backpedaling if it doesn't come through. He's supposed to be led by economic performance. So yeah, I would imagine him not doing it, but at the end of the day, can change him, can we? So that's just how I want him to perform, but then it's up to him to perform. But at the end of the day, regardless, when we have a new Fed chair, he's still one out of 19 members. He's still one other than many. So even though he comes in and says he is the one projecting the teams or the committee's beliefs, which I would argue that Mr. Powell was very splendid at doing, was to reflect the consensus, not necessarily your personal opinion. And in at least what comes to my mind was that the rest of the committee wanted a broader review of the projection material, I think it was, and Mr. Powell didn't want to. And the consensus wanted to have a review, and then they came to realize that they had their whatever, and it didn't come to fruition. They didn't find anything alternatively better work process. So at the end of the day, he got what he wanted, but he didn't display his dissatisfaction or his disagreement, at least not a lot. But he was displaying how the committee was thinking. Dollar is not going anywhere now. World once again forced to buy dollars. I would agree with you. So where I am, there's two things about dollar for me. Is Friday was a bit of a rushed decision to buy, not a burst decision, but it was a bit quick. It was a bit of a fast move higher. That doesn't mean it can continue higher. But we see today that with the reaction today that we are, one, not making higher highs, and 2, we have a slight little pullback, and 3, that could potentially be the new buy zone, though very far away from where I would be buying, but that could specifically be the case. And then we just leave without me. Then nothing is interesting. But I wouldn't be surprised. So my primary thought, understanding of the market, is that this dollar should come falling down again. And maybe if de-escalation could be the trigger, but I see this as what do you call it in English? Hut, an A-shape form more than a new. And the reason for it is I am struggling to see the reasons for driving it higher is long-term reasons. But I could be wrong. And if I'm wrong, then I'm not losing money on it anyways. I'm not saying I'm perma bear either on dollar, but I'm more of just how it went higher and we're in the current risk environment we're in. Easy beats lemon squeezing. Euro yen. Euro as a yen pairs really came down on Friday, and then they continued a bit lower today, and then has seemed to have found some kind of bottom at 184. And to me, that looks juicy. It's difficult to keep myself awake because that's a bearish one. I don't have any needs to be buying euro yen at the moment at current levels because I don't know where it's going to go. And if we're going to have a rate hike with Bank Japan next week, then we can go higher from here. But if they start to intervene, I don't want to be a part of it. I am assuming that there was some kind of interventions or something happening on Friday. Because euro yen on Friday, this is just speculation, don't quote me on it, but it fell 168. And then dollar yen should then be rising hard and fast, right? But it only rose by 60. So where dollar is strong and yen is weak, this one should have been rocketing. So something was going on, but can't prove it, can't tell until we look into the books of Bank of Japan. So for this week, easy peasy lemon squeezy. I am cautiously waiting for Aussie CAD, Euro CAD to turn around higher. That is just me being doesn't necessarily. I think that's where we're gonna go. We have had a bit of a drop that pauses me for a bit, but I can be interested. I could be interested if it turns around nicely. Currently not happening. Euro CAD, kind of the same situation. Turning a bit, potentially that could be the bottom for a new trend, but we have to see how that sets up for tomorrow. And pound, I don't know, maybe that's a bit of a weaker one, so not so much. For euro, and for that matter, pound, there seems to be some kind of reversal. Short term, though, a reversal or a pause or a reach to go higher to find more sellers. I said I want to come up to 116 yesterday. So that's still a good chunk away. We have the ECB meeting this week. So that kind of puts me off for being very aggressive about it. Aussie seems to be having a weaker day. So maybe that would have been a better idea to look for. But again, it's dollar strength and not necessarily the Aussie weakness by itself. And for that matter, gold for me, whenever it turns around higher, that is definitely not right now. It is pause and wait and cool and pause and wait and cool and let's see if it does. I am one of the believers of S&P 500 to turn higher. I believe that current fall is temporarily just to attract more buyers as long as we are still staying above 7,360. It's kind of like, okay, we are still headed. The reason why I still generally thinking they should go higher, as long as the reason for the current candle isn't dramatic, is that higher inflation, higher labor market or better labor market is still good for still good for the S&P 500, because it means that they can charge more. They still have enough people to hire, and they are able to get profits in. Sirens going on. War missile from Yemen near the border to Saudi Arabia. Prime Minister Netanyahu will hold security cabinet meeting today. Google and Nvidia consider Intel as a backup chip maker. Yeah, I saw some headlines about some, what do you call it in English? Shorts, not shorts, but like less supply, less availability. But yeah, cool. I don't see any other reason for why it would move. So okay, cool. Nothing too crazy then. So I believe this one should go higher. I haven't gotten it yet, but it looks interesting enough for me. But yeah, that's me. I hope you are enlightened about the new week. You are looking forward to the new week. And if you're not, and if you need help, you need mentorship, you can come to me. You can come to Discord. You can go to my YouTube channel. You can reach out. And the reason why I'm here is because I want to help you become a better trader. Even though I put losses on today and I feel a bit low about it, we're still going to make it. We're moving forward. So until next time, boom. I'll see you then.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good evening, good afternoon, everyone, wherever you guys are watching in the world. I hope you guys had a lovely weekend. We had a very interesting Friday, so we're definitely going to talk about that, and we're going to talk about how I managed that and how I'm looking to kind of, start trading into this next week. So Friday was very, very interesting, as we all saw, right? The market ended, the Nasdaq was down like 5% and some change. The S&P was down like 2 or 3%. It was a pretty bloody day, I would say, the Nasdaq and equity markets and anything risk related. But now we are starting to see a rebound in risk. So you are seeing the Nasdaq up 2% today, S&P up another 1%. You see the VIX here getting a little bit softer, which we actually made the comment. I personally made the comment before I ended my stream on Friday, was like the VIX is very sleepy. And come the end of the day, it was up almost 40%. It was up 39% on the VIX. And so that's why you were seeing those big sell-offs there across the market. But also one chart to look at, yields as well. Yields went ahead and popped. And the reason why everything was selling off on Friday was because the Fed now has room to go ahead and hike interest rates if they need to, right? So I think what was happening, and this is just my personal opinion, guys, and if you guys have any thoughts or anything like that, if you want to challenge it, please go ahead and put that into the comment section, because I definitely want to know where you guys stand on this. But I think that the market leading up until Friday was essentially front running the idea that the war was going to end, and that the Fed was going to hold on their rates. They're going to go with the base case of just holding rates until this thing dies down. I think the market was front running that. And on Friday, obviously that idea was very much challenged because we all know that the Fed has a dual mandate, which is stable employment, um, uh, maximum employment and stable prices. And going back into like the end of last year, the employment side of things was actually a concern, right? And so the Fed was kind of balancing that. Well, this time around we have elevated inflation, but you also have the labor market that's holding up quite nicely, and so having to pick and choose right between the labor market and inflation. Well, Friday's NFP report made it very easy to choose, and I think the market's finding out that the Fed's probably going to address inflation by hiking interest rates, and so those odds of rate hikes in December went from 40 something percent to 60%, and so that's why you saw yields higher, the market started to sell off. And so I say all that to say that I think that the fundamental framework of what caused the equities to drop is still the same. If anything, I think it got worse, right? Because correct me if I'm wrong here, chat, but did it more shots go fired over there in the Middle East, right? I think we were kind of going towards a peace deal, ceasefire, and didn't think escalate in the Middle East there. So you still have elevated inflation. You have a Fed that is looking to go ahead and hike rates because they can, right? The labor market confirmed that. And then you have no deal to be made in the Middle East. It seems like things are getting worse over there. So I think that any rebound in risk is likely to get faded. And I think all that is contingent on if you still have the VIX elevated and yields elevated. So that's what I'm looking to do, right? I have 3 charts in mind that I want to participate in. And I liquidated my euro dollar short position right here towards the bottom. So for this very reason. So I'm looking to go ahead and fade anything, any strength on the euro dollar. I'm looking to fade it. If I put a Fibonacci retracement level from here to here, look at that, right? Look at that. Fib from low to high, or high to low, I'm sorry. And the 38.2 lines up right here with this level of support that got broken. So this is a very traditional, easy peasy textbook break and retest. So if I get a break and retest of this 38.2 that lines up with this support that could be turned resistance, right? We have the edge finder, which I'm going to show you right here, is very bullish on the dollar. You have yield still elevated and you have inflation still elevated, right? So if you do get that, I'm definitely going to be shorting the euro dollar right here. Now, one thing I would say from a risk management perspective, my position size will be smaller than my initial one when I got this big move here. The reason being is because I'm no longer filled at this very attractive price. I am now lower on the chart. So I don't want to be chasing price, right? Because there is a chance that I'm dead wrong. Let's say price action gets over here and then you have a peace deal and yields start falling, right? And then the dollar starts to soften. Well, I'll just go ahead and break this level here. I'll get stopped out. And if my position size is large, then I give back the gains that I made on my previous trade. So I want to avoid that. I want to be net positive if I'm wrong on this idea. So I'm going to trade this idea until I'm proven wrong. And so if we do get over here, I'm going to go with a lower position size. Another chart that I'm looking at is going to be silver, right? Silver has been under pressure with the idea of higher yields, right? It affects the borrowing costs, all that good stuff. We all know the framework and the fundamentals that are driving this thing lower. Same thing. Now, one thing about the silver chart too is I wanted to short before the move happened, right? I just didn't get an entry. And my target was going to be that 200-day moving average. Well, we have now since touched that 200-day moving average. So I'm a little bit more hesitant here. So if I do get the retest into this level of support that could turn into resistance, my position size would be a lot smaller, and I'll just be trailing along the way as far as it goes, right? That's kind of my idea there with silver. Bitcoin, another thing, looking to go ahead. It hasn't actually broken yet. So with Bitcoin, it's a little bit different. So I might hesitate from this one, but ideally, I do like that 50K target. Ball out if you're in the chat. I'm right there with you, man. I like 50K at Bitcoin. I just need to have a pretty good level there to go ahead and short this thing. So we have some support here. It seems like we're bouncing off from there, which I do think that you'll probably see some kind of a rebound and risk, probably today, probably tomorrow. But ultimately, if you still have VIX elevated, yields elevated, oil elevated, stronger dollar, right? Those are the things that we have to watch. If that's still the case, then I'm looking to actively short Bitcoin and target 50K. So if I put a fib from here to here just to see where we land, yeah, this makes sense. So this gray zone that I have is pretty much the 61.8 to 50, 38.2. So if we get within this level here, anywhere here, we'll go ahead and see what happens, right? Then I'm looking to go ahead and short Bitcoin and target 50K. I think that Bitcoin is still under pressure. I think that there's going to be, or there is going to be some deleveraging, right? As far as like Japan too. Japan has a rate decision to be made, I think this week, if I'm not mistaken, which my fault, I should check that. But Japan has a rate decision to be made, and the likelihood that they hike is pretty much certain. Right now, the market is pricing in a rate hike there in Japan. And so if you do get that, that's more deleveraging for Bitcoin, especially specifically. So I'll go ahead and target something like this. So just trade into the zone and target 50,000. That's going to be it's not a 2-to-1, but it's going to be 1 to 1.5. So I think it's good enough for me. And then obviously as the trade progresses, I'll just, keep making my stop loss tighter, and then the risk to reward improves. But that's kind of my thought process there with Bitcoin. So looking to actively short Bitcoin, silver, and the euro dollar if we get any pops, right? Any pops, and you have yields elevated and oil elevated and the dollar strong. That's kind of my thought process there. Good morning, Rabies. How you doing, man? Hey, Max. Hey, Digital. Hey, Bashy. Good to see you, or good to talk to you again. Digital Content says, I'm always chasing with too big positions. Yeah, man, don't do that. Don't do that. Look, the moves are big, right? The moves are big. Like euro dollar right here. This trade that I got, it was a pretty good one, right? It was about 130 pips, right? So you don't have to put too much of a position size. You just got to let it do its thing. And so I'm, with euro dollar, again, I'm not going to put too much of a big position just because I don't want to override and overtake the previous gains that I had. And so, yeah, you just got to, go with the flow, man. Don't do too much. I think what's going to happen is, I think what happened is two things. This is kind of my thought on the retail behavior, because I was seeing this all over my social media, like my algorithm and stuff, my feed, because I was on it. Come Friday, big sell off. Everyone was rushing in to sell. Everyone was selling, right? Everyone was piling into sales on Nasdaq, on the S&P, and they thought the market open was going to gap, right? So that's like one side of the spectrum. Then you have the other side of the spectrum that's like people that are actively trying to buy the dip, right? And so that's the dangerous part, is you have people that are aggressively selling, but then you're also seeing people that are actively trying to buy the dip. So for the aggressive sellers, right now they're probably getting smoked, right? Right now they're not in a good position. With the aggressive buyers, you have the risk of this getting faded because the fundamental landscape has not changed at all, right? Like, why would you buy the dip if you still have the war going on? You still have elevated yields. You still have elevated oil, right? Let's look at Fed probabilities real quick here, just to confirm what I'm talking about. CME Fed Watch. Let's go to probabilities. Probabilities here. Look at that. You have a rate hike definitely priced in even now to October of 2026 with a 40% chance. So yeah, why would you buy the dip, right? Why would you buy the dip? I would buy the dip if sentiment got overextended, if the put to call ratio got overextended, if you got to see yields lower, if you got to see a peace deal solidified, right? That's where I would buy the dip. But for now, nothing has changed. And so I think that people are rushing into aggressively sell, but I also think people are aggressively looking to buy. And so that's where you have to be very, very careful. So me, I'm looking to fade any pops, right? Because I don't want to short aggressive, because then I'm going to be chasing price. So I want to short any pops, be responsible, lower risk, and let this thing do its thing. Not actively looking to short stock market. Again, I'm going to say it again, silver and Bitcoin and the euro dollar is what I'm looking to short, right? But that's where I think, people are probably doing with the stock market. So you got to be very, very careful with that. Right? Don't be aggressive to buy risk if the actual landscape, the fundamental drivers have not changed at all. And so, yeah, so dollar looking very, very strong there, very, very bullish. Let's see what's on the bearish side. Euro dollar, very bearish. I love to see that. It was -5 or -8 on Friday. Now it's -9. Kiwi dollar's bearish, pound dollar bearish, Aussie dollar's bearish. I completely agree with that. I think anything against the dollar is under pressure right now, some more than others. So for all my pound dollar short people out there, good job to you guys. Happy for y'all. Kiwi dollar is also a thing that you can probably consider as well. I just personally like the euro dollar just because it's essentially trading the DXY. So it's kind of what I'm kind of thinking of right there. Aussie dollar is getting bearish. Gold is actually getting bearish too, which is new. I haven't seen that yet. So gold right there getting bearish. Bonds are bearish, right? So bonds being bearish, it actually means positive yields to the upside. So that can definitely add fuel to the gold bearish trade or silver bearish trade, the euro dollar bearish trade, all that good stuff. So it seems like the market and the edge finder is pointing us in the right direction, which I love to see. So one thing I would say, guys, is definitely go ahead and consider buying a copy of the Edge Finder. It will, help your trading tremendously. I use this solely for picking awesome opportunities in the market, especially in a tricky environment like we are trading today, right? In this environment where you have headlines going back and forth, you have weird price action, right? Like you would think a strong NFP report is good for stocks, yet we didn't get that, right? So the Edge Finder definitely helps you at picking the right opportunities, and I would say definitely go ahead and buy that if you can. Use code ASPIRE or use code Marco even to go ahead and get it. But just definitely go get it, right? It doesn't care what code you use. I don't care. Help one of us, but just get the Edge Finder. It will help you out.
Yeah, we'll split the affiliate.
Yeah, we'll split it either way, so just get it. Use whichever one. We'll split it.
Hello, Alan. What's up?
How you doing, man? You feeling better?
Yeah, definitely feeling better. Especially after the winning trade on Friday. That tends to put some, let's say, positive thoughts in the mind.
That'll definitely do it, man. That'll definitely do it.
Yeah. What about you? I know you had a EU short. You're probably out of it, so looking to re-enter.
Yeah, I took it off Friday before the close.
Okay.
And so I'm kind of just in the camp of like, okay, I want to continue riding this wave for as long as it's the wave. And so I'm kind of just looking at right here. It kind of lines up pretty perfectly, honestly, too. You have a lot of things going for this trade, but if I just put a fib from the high to low, you have the 38.2 right here, right at this level of support that could turn into resistance if you retest this level and it holds. So I like that. And also to the Edge Finder is pointing bearish on anything against the dollar as well. So that's kind of like the trade I'm looking to do. Silver, same kind of concept as well, right? If you get a retest into here, the Edge Finder is pointing bearish. I would go ahead and short that. And then Bitcoin as well. I want to target 50,000, but I just want to get a good price on that. So I'm going to wait for a pullback. So I think that is probably probable that you get some kind of a rebound in risk. But I think that over the long stretch, the fundamentals just point to, the dollar being the benefactor. And if that's the case, it's lower metals, lower,
Yep. I do agree. I think the risk off theme is going to be the most important one. Or sorry, the risk off theme is going to be the most important one in the next few weeks. Did you see what Saylor did? I think he sold some Bitcoin and then he bought it today, I believe. So if we go to BTC, and it's really important. I know we talked about Saylor as this sort of meme, but like he's the guy with Bitcoin. It's like the story with the guy that is buying eggs. So essentially you have an egg broker and you have an egg buyer. So the guy, every single week, he buys a bunch of eggs. And then after, let's say, 2 months of buying eggs, he goes to the dealer and says, okay, I want to unload all of the eggs because the price went up. And the dealer says, well, you're the egg guy. Like, who are you going to unload to? You're the one holding all of the supply. So I think that's similar to Saylor because he does have a bunch of Bitcoins. And essentially, I think he sold near 73, 74, and now he bought back around 60, 61, which is interesting that he do it on purpose, that he manipulate the price, that he sort of push all of it out there to get a cheaper entry, but no one knows. I do think if he does continue to sell, it's going to be a pretty bad case for Bitcoin, and I think actually the 50K target is pretty good. So I know it's in the A1 Discord, the 50K target is a meme, but it could easily be hit. Absolutely.
Yeah, and I wonder if he, they say his average price was like 70K or something like that, but that doesn't mean that he was filled all of his positions at 70K. Like, his strategy is like accumulate over the long stretch. So maybe the ones that he sold were just filled at like 30, 40K. So it's a profit. He sold a profit. He realized a profit and he bought more. So, just because Michael Saylor sold doesn't mean that he realized a loss there. And then also too, Max says like the tax portion of it too. But yeah, I'm curious to see. I agree with you, Marco. Our friend Ball out there agrees with this as well. 50K Bitcoin, I think, is good value. So I'm trying to go ahead and short into that zone.
So Also, we had the NFP print on Friday, which we did talk about. So it was a super hot print. The next thing I'm looking at is the CPI and the PPI. Of course, it's going to be the inflation, and then we're going to have the Fed meeting on Wednesday next week. So what do you think? Does it matter what Warsh says, or is it all about the dot plot? So Warsh can come out super dovish, or he can come out super hawkish. It's like completely 50-50. So what do you think?
I think if the Fed committee was only one member, then it would matter, but it's
Yeah.
not. It's not.
Yeah.
So I'm going to pay attention to that CPI number. It's Tuesday. Is it tomorrow? Or Wednesday?
I think it's Wednesday.
Wednesday.
Let's
Okay.
take a look. If we go to this week, yeah, Wednesday. So Wednesday is the core CPI, and Thursday is the PPI. So of course,
Okay.
CPI being the more important measure, but the PPI, there's usually apparently a lead lag relationship where the PPI is the leader and the CPI is the lagger. Of course, the Fed looks at the CPI. So if you're just looking at the Fed event, I think that the CPI is the most important print. But as you mentioned, so it's not just Kevin, it's like 12 committee members, and they will release the dot plot, which is the most important document that I'm watching. So if we go to the next week, FOMC economic projections. So that is the document that I'm actually looking at. Maybe the market overreacts if Kevin sounds dovish. So maybe we get a brief reaction on the dollar, a dovish reaction. But I think long term, people will look at the projections. So they will ignore what Kevin says, even if he comes out dovish.
And you know what? Right now the market's kind of expecting for it to come in higher than expected too. CPI to continue rising up. So
yeah,
I think if you get the number that confirms, inflation is going in the wrong direction, I think you're definitely going to see a stronger dollar there. So I don't know. I don't know how I want to approach it yet, Marco. Like if I were to get a meaningful pop in, for example, euro dollar before that Wednesday meeting, then I want to be short before the CPI event. But if I don't want to take the gamble and CPI comes in cooler than expected and get in prematurely. So if I can get a meaningful pop in euro dollar, then I'll probably short before the CPI print. If I don't, then I would rather wait for the CPI print to come out. And if it comes in hotter than expected, then I just kind of buy immediately, or not buy, sell immediately after that and continue riding the wave lower. That's what I did with NFP when I added my extra position size. Was I waited for the NFP report to confirm anything or not, and then I just got in immediately after, and I got filled at an okay price. So I'm not too mad at that. But that's kind of how I plan to do it.
Nice, yeah, and it definitely worked out because I think that the sort of the sell-off happened after the NFP, and you had like a couple of minutes to get in, so that was a pretty good trade right there.
Now, thank you. And Marco, do you have anything else that you're looking for? Like I know you also dabble into like foreign equities as well, right? Like the Nikkei and stuff like that. What else do you have on the horizon besides your typical dollar play?
So the Nikkei actually hit my level. If we go to Trading View, Nikkei. So Nikkei actually hit the level. It touched the 20 MA, which is exactly what I was looking for, but it's neutral on the edge finder. So that's a problem. I would prefer to get a bullish reading here, especially with a score of 1. I think this is much too low for me to execute. So even though the entry area is nice and the price action looks completely like fine for my strategy, the edge finder is neutral. So for now, I can't get in. But if it flips to bullish, I will, of course, I will consider getting in on a buy position. I am feeling a bit of risk off in equities. So you have all of these IPOs coming out. You have a bunch of retail interest for the Nasdaq and for artificial intelligence. So it's getting a bit weird, let's say. So all of the retail is starting to pile into the Nas and into tech stocks. Now, that's not the reason for me to stay out of the Nikkei, but it is just something I do have in the back of my mind. And as you mentioned, like we are expecting this risk off to actually continue. So this could be just the initial leg of the sell-off.
Okay. Would you consider shorting the Nikkei in that case then?
No, the Nikkei absolutely not. But maybe the Nasdaq. I mean, the Nasdaq has been a flyer. Like if you look at the 200 EMA, we are far above the 200. So I think if you want to short something, it could be the Nasdaq. There is a much better reward to risk with the Nas compared to the Nikkei, where if we flip it to the Nikkei, it's still definitely overextended, but I think the Nasdaq is a better one, especially with all of those retail traders starting to pile into the Nasdaq, starting to pile into technology. What do you think? So would you short?
Well, from experience, I've never shorted the Nasdaq, but I do know how difficult it is. But then I also know how lucrative it is as well. Like, catching something like that is insane, insanely worthwhile if you can do it. But I mean, I don't know, right? Because I don't know if like the Nasdaq pops over here again and then starts to sell off, or just does like a super easy like fib retracement and then continues to the downside. I don't know. I wanted to check the edge finder and see what the put to call ratio is at the moment. Because if it is overextended in one direction, then maybe that can make the trade a little bit easier. Again, nothing is easy, but let me just see here. So the S&P, insanely high put volume right now on the S&P. Nasdaq, I wonder if it's the same. Different. It's in the call side. So you do have a lot of buyers there that are looking to buy the dip on Nasdaq. So maybe that is good. If it gets overextended to the call side on the Nasdaq, like deeper, like as if the S&P chart was, then maybe, right? But I don't have experience in doing this, but I'm just gonna go on a whim here and say, let me just do this. This is just basic technicals here. I think probably at 30,000 ish would be a good level to go ahead and short. And then I would put my stop above the highs. That's just kind of my thought process. But again, I've never done it. The edge finder would also have to confirm that as well for me to have some confidence in the trade. But again, it's definitely worthwhile if you can do it.
Absolutely. I mean, I think I shorted equities a couple of times in the past, but very, very few times. So it's not like I'm super excited to do it. But yeah, the reward to risk could be massive. And even if we just go back to that big level of support or go close to the 200, that's a big trade right there in and of itself. So you don't even need a massive drop on the Nasdaq. I do believe that the SpaceX IPO is coming out this Friday. So what do you think about it? Did you do any research on SpaceX, or are you mostly putting that on the side?
No, I'm just putting it on the side. Like when it comes to single stocks, just my personal philosophy is like I kind of trade them in the long term. So if anything, if you were to get some kind of a discount or price to start establishing itself on something like SpaceX, then I would probably buy it. But I like, for me personally, I like quantum computing. I like cybersecurity. I like buying the indexes for long term. That's kind of my thing though. But yeah.
Okay, interesting. Yeah, like I'm just gonna mention this because I think some people may be interested. So to get the sort of the IPO price, you can go to Hyperliquid and then just search up SpaceX. So this is the rough price for now, around 166 per share. And I think that is actually far below than the valuation that the guys that are issuing the stock are giving out. So I think this could be a pretty fair valuation right there. Now the play could be to sell Tesla, basically, like to go into the event selling Tesla, because there could be a lot of supply pivoting, a lot of demand pivoting out of Tesla and into SpaceX. So if you like Elon Musk, we know that Tesla has been trading like a meme stock. So like valuations don't matter. It's like you're not trading Tesla against the dollar, you're trading Musk against the dollar. So I think that same sort of valuation could go into SpaceX, and SpaceX is the main baby of Elon Musk. So I think even on FTMO, you can trade Tesla, maybe even on Hola Prime, I'm not sure. but that could be a good short this Friday, especially if you get a broader short in equities, like if you get a broader sell-off in equities to bring everything down. That could be an opportunity that personally I'm looking at. Now, what about USD JPY? So it's above the 160 level, about to hit 161 actually. So do you have any opinion on that? Do you want to go short?
I wouldn't go short. I think I like the breakout play actually. Me personally.
Okay.
Especially if we're kind of thinking in the terms of like stronger dollar, that the whole theme of what's going on. I think a breakout play to the upside, but again, it's kind of risky buying it here because yes, the breakout can work, but then also an intervention can happen as well. So I would rather buy the dip if I can, if an opportunity presents itself. And I actually think that, again, I'm hopeful that you do get some kind of a softer dollar there, because that would mean euro dollar goes up a little bit. Silver goes up a little bit, things like that. So I'm hoping for that to happen. And maybe that can translate into USD JPY going lower. And if it gets to like 158 per se, I would be open to buy it there. But I wouldn't necessarily buy it right here, just because you're very correct on the possibility of an intervention. Like if they decide to defend 160 again, then it could be a little bit risky. So I'd rather just buy the dip if I get one.
Yeah, I mean, the BOJ or the MOF, they have some headwinds. So they have basically the US fundamentals that are super strong. They have the Fed that's maybe going to hike. So they have US exceptionalism. So a lot of money going into the dollar to buy US stocks. And doing an intervention into that could cost a lot and could produce no result, like it basically did in this last drop that we had.
Exactly. That they 11 trillion or some change, and it was completely erased. So meaningless.
Yeah. So let me get your favorite trade for this week. What would that be?
Euro dollar short, if I can get it.
Okay. Yeah, I thought so. I think it's a pretty good trade as well. I'm looking for the same thing, but GU, like looking for a pullback to the 20 MA on GU. But I mean EU, GU, it bets on the same thing. It bets on the dollar strength.
Yeah, GU looks pretty good too. In fact, let me do this real quick. Yeah, I did like a hypothetical trade thing here with the fibs. And that 61.8 lines up right there with that 200-day moving average as well. So that could be a good one. And the edge finder is actually pointing bearish on this one as well. It's pointing bearish on pretty much everything against the dollar. So it's actually getting a more bearish reading than euro dollar. So yeah, for all my GU traders out there, it's working out quite nicely there. I think if you get a pullback into that 200-day moving average, it could be worthwhile as well. But I'm not gonna overextend. I'm just gonna stick with the euro dollar one and just wait for that one.
Yep, absolutely. That makes sense.
All right, man. I'll go ahead and let you do your portion of the segment, man. It was great, and hopefully we get an entry opportunity. If not, CPI on Wednesday. We'll see. We'll see what happens there.
Sure, no worries. And the CPI on Wednesday is the next big print. Well, thank you, Alan, very much. I will see you tomorrow, and have a great rest of your day.
All right, man. Take it easy. Bye.
Yep. See you. Goodbye. I do want to mention, if you guys want to get funded, so check out Ola Prime. Now, there is a discount code, which is, let me just take a look, A1 Live, okay? So the code A1 Live gets you 35% off Ola Prime. Now, the cool thing about this prop firm is it is friendly for swing trading. Okay, so I don't believe there's a consistency rule on some of the account types, which is really, really important. Okay, because the consistency rule, it's tough. It's a tough rule. I'm not gonna lie. Anyway, if you're looking to get funded, I think you get a great price here with a 35% off. So all of the information is in the description of the stream. Watch list. I have gold. I'm still in the gold position. I'll probably get taken out. My game plan is basically to get out on a rally. So this thing is not working out. If we can get a bit of a rally to the upside, a blue candle today or tomorrow, I'll look to close. Otherwise, it can go ahead and hit the stop loss, part of the game. I've had some decent winners in the last few days, weeks, so I don't mind taking a loss on gold. Personally, I still believe this is a good bottom. I still don't see a massive amount of selling coming in, but since gold is heavily connected with risk on assets, and the worst thing about gold is stocks go up, gold goes nowhere, stocks sell off, gold sells off in sympathy. And especially if we're going to have higher rates coming for the United States, that is going to be very, very problematic. Okay, higher interest rates are very bearish for gold because they make bonds more attractive. They bump up the value of the US dollar. All of that is a bearish catalyst for gold as a metal. So that's still on the watch list because I have a position running. GU, I had a short. So I had a short position, closed it for a win, plus 1.46%. This was a signal in the A1 Discord. So if you want to get all of my trades, you can do so. And you can use the code Marco to get 25% off. So the link to join the Discord is in the description. And the code Marco gets you 25% off. You get access to basically Nick, Chris, Alan, Iwind, me. I think I mentioned everyone. You get all of our analysis. You get access to the VIP trading chat, which is very fun. And there's a lot of quality traders in there, actual profitable traders. So it's a great package, I would say. And it's the best trading Discord that I have personally ever been part of. So GU, I'm looking to re-enter. Yeah, almost forgot the game plan. For GU, I'm looking for a pullback to the 200 or the 20 MA. They should coincide, and then I'll be happy to get in on another short position. I'm still bullish on the dollar, so let me set an alert there. Let's put an alert. I am still very much bullish on the US dollar. I would love to get into some dollar longs. Also, give me a second to turn off the AC because I'm freezing. Okay. So dollar longs are the play at the moment, in my opinion. That is what I'm looking at. And that would mean to get a better price on GU. GU is still very bearish on the edge finder. Let me check that. Yep, very bearish. So it makes total sense. I mean, political turmoil in the UK, it doesn't seem to be improving. That is bearish for the currency. Their economy is not doing well. So yeah, just not a great story. I mean, a good story to short. So good story for me if I'm going to sell GU. UJ, I'm looking to short UJ. So with UJ, the higher it goes, the higher the chance of an intervention. So 161, 162, those are some key levels that I'm looking at. We are now at 160. 160 used to be the key level, but I don't want to get in right here because I could get stuck in that position. But I think the higher it goes, the higher the chance of an intervention. If we hit 162 or 163, that's going to be like 70 or 80% chance that the BOJ intervenes. What does that mean? That means a massive drop. So a drop like this. I wouldn't be betting on a complete trend down. I would just sort of look for a drop and then I would probably take profit. So I would look for a candle such as this one. And then I would take profit, try and take profit near the bottom. So that's the game plan on UJ. Maybe take an initial stab at 161 and then add another at 162. Stop loss probably above 163. The main risk is that I get stuck in this position for weeks or months, because the price could just range around that level for a very long time. Like we have been near that level ever since March. Well, ever since January. So, I mean, that's the risk, that we just continue in this range and that I pay negative swaps. The swaps could get pretty heavy with this position, pretty expensive with this position. Nikkei rejecting pretty nicely. Yeah, so the Nikkei is looking very, very nice. As you know, I need a confirmation from the edge finder. So right now it's neutral. I need this to print bullish, and then I will consider then I will consider some buy setups. This at the moment looks good. The price action does look good. This is exactly what I have been waiting for. I just don't have the edge finder confirmation. So at the moment, I'm not going to be looking for entries. The Nasdaq I completely removed. So the Nasdaq I have removed from the watch list because I believe it's far too overextended. And if I do want to participate in equities, I would rather go with the Nikkei. So I would rather risk it with the Nikkei rather than the Nasdaq. So that's why it's off the watch list. That's about it. I have 4 things on there, and those would be the best trades for this week. Let's see. Max says, sounds a bit counterintuitive, but rather use 80-20 bi-weekly than default 95% split monthly, as you need 3 profitable days bi-weekly, while 7 is required for monthly. Okay, so that is interesting. That does make sense. Less profitable trading days is always better with any prop firm. If that is what you're talking about, then I believe you are talking about that. So we went through the watch list. Crypto seems to be pretty bearish, and personally, I don't want to participate in crypto at the moment. If we hit 50K, that could be a good time to look for buy setups. I think so. Yeah, 50K could be a nice level where Bitcoin can bounce off of. And you have to note, in the prior crypto winters, in the prior massive drawdowns, they have been 60, 70, maybe even 80%. The current drawdown, if you measure it from the peak to the trough, is 53%. So that is nowhere near what Bitcoin usually does. But if we hit 50K, that is then 60%, I think. Yeah, 60%. If we hit 40K, that's 70%. So that's, I would say, a nice drawdown. That's a nice pullback. That's a nice correction. If we do some fibs, like look at the last time we had the massive correction, 77%. That is usually how it goes. It is unfortunate, but that's what happens. 618 is right at the 57K level, but I think we go lower. I would say we go lower. I think that the interest around crypto is not there at the moment. The hype has died down. There's just no narrative pushing it higher. There's very little interest pushing it up. Joseph says, any thoughts on Euro Swiss longs? That is interesting, although on Euro Swiss, I wouldn't be going long here. I would be going long near the 0.1 level, 0.9 level, because that is the level of a possible intervention. That is the level that the SMB is definitely looking at. So 0.9 level right there. Okay. We are now far above it. I'm not seeing any sort of a catalyst why this should really go up. But if we approach 0.9, then that could be a good one. Let me check the edge finder. Neutral. So it coincides with my opinion. To be honest, with Euro Swiss, I would just ignore fundamentals. The only play that I would look to execute is buy near the 0.9 level. I did it once. It worked out pretty well. I'm trying to do the same thing again. And near 0.9 level, big round number, SMB gets vocal around that level. And you have to know that who's working at the SMB? Humans. Humans love round numbers. So that is why that level works. Okay, that's the mechanics behind it. I still have 1 more minute, and then you have Tiger coming on. I do want to repeat, if you guys are looking to get funded, check out Ola Prime. Code A1 Live gets you 35% off. So really a great prop firm, up-and-coming prop firm. I think it competes with the best of them, like FTMO, but with the code 35% off, you get a really good price. And from my research, it's swing friendly. So it doesn't have the consistency rule, which is at the moment the toughest rule that swing traders have to deal with, consistency rule. So because of that reason, I do really like Ola Prime. Link is in the description. If you want to take a look, definitely do. We covered metals. Let me just check copper. Not doing really much. We covered Forex. I think the best position is buying the dollar. We covered the indices. I love the Nikkei the most, looking for buy setups. We covered crypto, just super bearish. Oil, I haven't talked about, but oil, I don't want to touch. Oil seems to be staying elevated for longer. Seems to be flat at the moment, very range bound. And to be honest, the conflict in the Middle East does not seem to be improving. I know there's a new agreement, there's a new deal coming out every single week, but all of those tend to break down, unfortunately. So it is just the way that Trump manipulates the markets. And if you haven't caught on so far, you need to catch on. Okay, so ignore the headlines, focus on the numbers, focus on the fundamentals. What we had a hot NFP print, we have the inflation print on Wednesday, super important, and we have the Fed meeting in 2 weeks. So that's it for me. Thank you very much for watching. Don't go anywhere because Tiger is coming on in 30 seconds. I wish you a great week in the markets, and you can catch me in the A1 Discord. So that's it. See you. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, traders? How's it going? Happy Monday. Hope y'all had a relaxing weekend. I hit the pool, although I got there a little late, so I avoided the sunburn that I was telling you guys about. I think it was about 4 when I got there, so plus it was overcast and actually rainy, but hey, we're going to get wet at the pool anyway, so I stayed pretty much all night. It was a good old time, but anyway, back to business. Ladies and gents, on Friday, I had an oil change, and I brought my laptop with me so I could do some other content work while I was waiting in their waiting room. They have Wi-Fi there. And of course, that's always the beautiful thing about trading and content creation. You can go do it about anywhere, as long as you got an internet connection. So anyway, it took a little longer than I thought. And I was rushing home so I could close the trade out, the pound dollar short, but I missed it by 1 minute. Keep forgetting that my brokers closed the trading side out about 5 minutes prior to the end of the intraday session, so I missed it. So anyway, I had to sweat it just a little bit over the weekend, but thankfully pound dollar gap to the downside upon the open. So I ended up taking that out inside of the demand zone that I told you guys I was looking to buy to come from. So ended up being a pretty good trade. I think it was $3,600 across the 3 accounts I've got. Again, I've got 2 challenge accounts, and then I've got 1 instant funded account. So that's just kind of where I sit with my own personal accounts. But hey, at the end of the day, trade's over. Profit taken. It's time to go find something else. So pound dollar is still giving us the most bearish look at the moment on Edge Finder, minus 11, right there with Kiwi dollar as the 2 strongest on the bearish side. So for me to get back into this thing, I think I would want to wait for a retracement, in all honesty, all the way back to the pre-NFP level. So if I just go over here on the actually, I need to double check the daily, make sure nothing changed. Okay, yeah, alligator's mouth still opening to the downside. I like it. So let's go back to your 1 chart view over here. I drew up a 2-hour supply right here. Again, this is kind of that a couple hours or so before the NFP release. So I personally don't want to be trying to short again anywhere down here because of the fact that we bounced into the demand over here. And as you can see, it's given us a little bit of trouble. So, you know, where I tried closing right there, that's the funny thing. On the way home, I could see that it was dropping towards my take profit. So I thought it was just going to hit it. but it ended up dying off shortly before. And again, that's when it closed. But again, thankfully it gapped in my favor. And actually, since I was watching live yesterday, I was able to kind of go down in here and let's go back to the actual account. I was actually able to kind of go down here and monitor it live. So I actually stole about another 20 pips out of this thing, because where I wanted to close right there at the 133.35 level, I actually, in fact, closed it down here closer to 120 or 133.20. So, hey, it doesn't always happen that way, but this right here is exactly why I want to get out of my unrealized profits at zones, because you tend to get these bounces just like you see here, and rejections back to the upside. So that's not to say it's going to turn around and completely go up, but do I want to chance that? Absolutely not. So anyway, yeah, as far as another opportunity on pound dollar, I personally am just going to wait for a retrace up to that pre-NFP 2-hour supply zone. So that's kind of where I'm at with pound dollar, and we'll just see if we can do it all over again. At the end of the day, don't want to be greedy. I was definitely greedy by not closing it out Friday, but hey, I also don't want a speeding ticket either. So anyway, thankfully that worked out well. All the dollar pairs, that's basically what we have on EdgeFinder right now, guys. Pretty much all the dollar pairs outside of dollar Swiss are on the bullish and bearish list, depending on if it's base or quote currency. So you got that. You got the Dow, obviously. Let's go over here to the list. The Dow, and then US dollar index for those futures, currency futures traders. Definitely a good one to look at as well. But because we had such a strong move away from that NFP, we're a mile away from all the zones that I want, right? Just like we saw on pound dollar, it's pretty much a repeat for the rest of them. Aussie dollar is a long ways away. I do have an alert up here, as you can see. If I go back to my 4-hour, I personally don't really want to get involved in this section right here, because I think that's more of a fair market value area for about that 2.5 week period. It's just like what we saw on pound dollar and a lot of these other a lot of these other dollar-based pairs. We had the big spike down, which is the zone that I like, but then we just kind of got lazy and went sideways forever. So I don't think, me personally, I want to be getting involved in these retail areas, these fair market value areas, like you see here. And then, of course, if you take that and move it over here, you got the same thing over here. I want those more extreme zones. Now, it's drawn up a couple zones, but I just don't like it. I want the extreme zone. So to me, the extreme would be closer to the top there, the true origin of this strong move down that we saw on Aussie dollar, and just like a lot of these other pairs. So that's Aussie dollar on a daily, Euro dollar on a daily, similar thing. Fair market value area in here. Give me a more extreme zone and I'll be a little more happy. So there's a 4-hour zone structure up here that I'd be interested in. It's going to be showing me some zones inside of this fair market value area, this equilibrium, if you will. But are they more institutional zones or are they more retail zones? Do I want to trade with the retail traders or do I want to trade with the banks? I want to trade with the banks. So sometimes these zones work just fine, but more often than not, they fail. So that's why, for me, I want to wait for a cut through all that nonsense. And it may slow it down, but at some point, I would be more interested in the zones up top for my shorts, if that makes sense. So that's what I'm looking at here for Euro dollar as well. Just give me a retracement back up to some more institutional looking zones. And honestly, the true origin of this strong move down is probably even going to be the highest probability. So just kind of getting a second set of eyeballs, since I already have a daily supply, I'd be drawing in my 4-hour like this at the very top of that zone. So that would be I think the highest quality entry. But Euro dollar, again, it's giving us a very bearish signal. It may not even make it anywhere close to up here with as bearish as the pair looks right now. But if it does, and that's always the statement, if it does, hey, I'll be ready for it. Maybe look for a partial position here. If this fails, hey, up here's the true origin of the strong down move with a daily set of eyeballs on it as well. I just didn't have the daily look here, so that's why I didn't draw up a daily box. Okay, that was the true origin right there. So yeah, like I said, ultimately, that's going to be my play for Euro dollar. If by some miracle we have Euro dollar strength, I should say, to push us up there. But if not, hey, just wait. I mean, currently we're in a daily zone of demand on most of these pairs, to be honest. We just saw pound dollar, euro dollar as well. Okay. So I don't want to be shorting anywhere in this area. And there's even a zone pretty not too far away. So it's just a very cheap place. We're basically at a discount area as a whole. If we do our, if we wrap our curve analysis from swing low over here to swing high, well, that's basically down in the discount. I don't want to be selling in a discount zone. So not really a trade for me there. Pound dollar, we just looked at that. Moving over to Kiwi dollar. This one is this one has a little bit of an equilibrium spot here as well. So I definitely want to be avoiding this whole area here. Pull that forward, and I want to ignore this zone here. So it's given a nice looking zone here, I got to admit, on this daily time frame. Now the candle is obviously still active, so I won't know where this candle closes until obviously the end of today's intraday session at 4 p.m. my time, 5 p.m. New York City. So I can't, in good faith, draw this up as a daily supply, but even if it does close somewhere down in this area, it's still basically inside of this zone of equilibrium here, or this retail market, fair market value. And I just don't know if I want to play in that. So I've got a zone a little higher up the curve here, a little higher up the scale. There's a nice looking daily there. And it looks like I've already drawn a smaller time frame zone up inside of it. In fact, I'm just going to do this. I'm going to steal that zone because I want to wrap around the dollar, the daily rather. I want to color that yellow and then go back down to my smaller time frame to find my confluence. And there it is, sitting there winking at me. So there would be my two sets of eyeballs, ladies and gents, that I would personally be interested in for Kiwi dollar. Kiwi dollar. Again, we're avoiding this retail chop area. That's a nice looking zone. Okay, the volume could have been better. So there's a -1. There's a little bit of a red flag. Talking about the leg out candle there. Okay, it's not like it was a big, strong candle. It was bigger than the base in candles, but it wasn't that big. And there wasn't a ton of volume on the candle before the yellow. This candle looks fine. It's the candle before it, meaning the leg out candle, that I'm not too thrilled with. So alongside of the fact that it's inside of this fair market value area, the volume is just not a pretty picture. What about up here? Well, this could be better too. Okay, this volume could be a lot prettier too, and it's not really the greatest, but at least it's trying to incline on its way down, and it had 5 red candles in a row. So that would be a partial position. Plus, again, it's a little pricier than this zone down here. So I would still keep an eye on this. I just probably wouldn't be risking a regular percentage. Okay. I wouldn't be risking a full percent. Now, guys, for me and my challenge accounts, when I got them, I started on 0.2% risk per trade. And one of my mentors way back when I started learning currencies back in 2015 said, when it comes to trading and your risk management, how much you risk per trade, he basically said, trade as small of a position size as your broker will allow until you get bored making money. Okay. Until you get bored making money. And then when that happens, whether it's 10 trades, 20 trades, whatever the case is, then slowly increase your risk. So I started at 0.2%. Excuse me. And I've done pretty well with it. Had a pretty good winning percentage, growing my accounts. I had them all in the hole at one point because when I first got the accounts, I screwed up on some entries and just had really bad trades. So it took a while, but I dug out of the hole on all of them, and they're now comfortably moving up. So rather than it staying at 0.2% risk, I bumped it up to 0.3% risk. Okay. Now that doesn't sound sexy and it doesn't sound like a big number. But the maths when you do it right. Okay. In a lot of textbooks that you read on trading, they will say risk no more than 1 to 2%. I think people hear that and they hear the 2% and they think, well, I'm going to risk the full 2%. And then they blow their accounts. So point is, risk a stupid amount of money like tiny until you just literally get bored with making money. And then you can slowly start to increase yourself. If you do that, especially with challenge accounts, you won't have to be worried about breaches. As long as you've got a decent trading strategy, then in the long run, you'll make money. So again, that's not sexy amounts, but between 3 accounts, it was $3,600. I'll take it. Okay. So, and that's my first one in the 0.3% risk range. So I'll probably do another 10, 15, 20 trades like that. And then I'll just slowly bump it up, 0.35. And I'll probably personally max out at 0.5%. Again, and I think I told you guys this a while back, but they've done all kinds of poll studies on prop traders, profitable prop traders, and they find that the average risk per trade is only 0.5%. So when you read in those old textbooks, trading books, 1 to 2% max on the risk, don't let that fool you, because the people that are actually making money in this industry aren't typically risking that much. And that's the beauty of a prop firm, is you've got large amounts of money that you can buy into. So you don't really have to. It's not like a $5,000 account or, $2,500 account. You start getting the 50s and the 100Ks and the 200K accounts. Hey, you can make a lot of money off just risking 0.2, 0.3, 0.4%, 0.5. So anyway, just thought I would throw that out there. Guys, let me know in the chat if you have any tickers you'd like me to look at. Hello, Teddy. How's it going? Again, I'll take a look through some more of these assets that I have. Let's see here. Some assets that I was telling you guys about on Friday. So pound Kiwi CAD, we lost these off of our list. But pound Kiwi did actually bounce into my confluence I was telling you guys about last week for that possible short. But then again, it fell off. So I actually avoided that trade because, again, I was already in the pound dollar short. And I just didn't personally want to double my risk on any one currency, one individual currency. Talking about the British pound. But nevertheless, you can see it did bounce in. It has gotten a little bit of a reaction, but now it's off the list over here. So I'm probably just going to go ahead and ignore that, even though I love everything about the technicals. I got to tell you, that's a very sweet look right there. Very strong zone push out, structural break, and it took it all the way down until we finally bounced into a smaller time frame demand zone before we got our bounce. So at this point, I mean, it's retraced a great deal of it. It's retraced that whole entire move. Just looking at the technicals alone, I really like it, but the fundamentals shifted. Okay. Fundamentals shifted. It's a very dynamic list, guys, talking about the top setups. Pound New Zealand. Let's see. Let's go find it over here. Pound New Zealand. Where did it even go to? Pound Swiss. Okay, those ones are way up here. Oh, okay, there we go. So so look, it went all the way to a +1. So do we want to be shorting something that is given a little bit of a overall bullish look on the sentiment, and a tiny bit of bullish look on the technicals? The fundamentals are still good, but that stuff kind of changed, so it's taking it off the list. As far as, speaking of the COT report, let's go have a look and see what the banks bought and sold last week. So the number one loser currency-wise was the Canadian dollar, guys. They did get rid of almost 16,000 long contracts, and they also added 9,200 short contracts. So that is a very bullish number. Either one of them individually is a bearish look. But then when you stack them together, it gives you an 8.2 week-to-week % decline. So sold off on the CAD, sold off on the Aussie as well. It's no wonder, because Aussie is the worst performing currency when it comes to the fundamental side of things. I think it's sitting at about 33% right now on that surprise index. So there you go. Aussie in the seller. Dow, obviously the big winner. The put to call ratio is also screaming bullish on this thing as far as contrarian signals. So Dow is definitely looking good. It's on our bullish list, obviously, right there with dollar yen and dollar CAD. And then copper, if you guys trade copper, okay, that one's on there as well. So figure we'll take a look at a couple of these items as well. Bitcoin, pretty negligible, 0.25%. Oil, yeah, -0.75%. So again, guys, me personally, that -2 to +2 range, I just personally kind of ignore. I just kind of look at that as a little bit on the neutral side. I personally like trading assets if they're -2 or lower or +2 or higher. That's just my taste. I don't know if you guys have any preference on your COT numbers or not, but that's just kind of the way I do it. Just give me the extremes. It's just like the zones. Okay, I want those zones not in a fair market value area. And that's also the reason I use 80/20 on my RSI. Again, I want the most extended readings, the most overextended readings, okay, rather than the typical 70/30 as far as looking at my currencies or my anything really. So Anyway, having said all that, go have a look at the major currency pairs. How about it? Aussie dollar, we've already kind of looked at. Euro, pound dollar, Kiwi dollar. Now we need to go to dollar CAD. That was the next one on the bullish list. And over here, I have got an eyeball on the I have a daily zone here, but I feel like this is probably going to be a little too high on the curve for my taste, even for my taste. This is not only not in the middle or the lower end, it's actually closer to the top end, because if I do my curve analysis from swing low to swing high, you can see this demand zone is clear up here in the premium zone. So me personally, even though it's given a bullish signal, I just think it's too expensive. And it's already been up in this area a couple times and gotten a bounce. Okay, here was a supply zone that got hit here, went a little deeper here, collected more unfilled orders, and then pushed down in both of those cases. So now here we are in there for a third time. And there's still a little bit of unfilled order potential just ahead of this wick right here. So if I just go and find my horizontal line tool, there you go. We haven't quite gotten there yet, but a little bit of there's just a little bit. There's a handful of pips of daylight between the top of that wick and the distal line of the daily supply zone, which for some reason I had red instead of yellow, but you guys get the idea. Where's that? There we go. Yeah, I meant to color that this color. Oh, not that. That. There we go. Daily supply, not to be confused with 4 hour. So that's where we're at with dollar CAD. It's too expensive and it's bouncing into a mitigated supply zone. I don't want any part of that. It's either got to give me a deeper retrace or just completely blow through the top and form a new zone. This is what I think I would want to see, guys. Let's bust through the rest of this remaining supply that may or may not be there. Get a close up here, and then a retrace to a newly created zone of demand. That's what I would want to see. You don't have a overhead supply, a daily supply until we get clear up here. So it's a long ways away. I think that could give a pretty good profit target. Again, if this happens, if then situation. So that would be dollar CAD, and then the other dollar based pair with where the dollar is the base currency would obviously be dollar yen. We are approaching that intervention territory again. They had a headline saying we did have a little bit of a possible intervention shortly after the NFP report came out, where you can see we had this big 55 pip drop right in the middle of the day, shortly after the 7:30. Well, I should say 8:30 report, the 8:30 NFP report. So NFP comes out, you get a big spike up. We bounce into that overhead supply that I had drawn up. And what happens? Okay. Does this look like a central bank move to you? Well, it does to me because of the gigantic red candle that we had down here, the 2-0. But just like a lot of these interventions of late, it wasn't enough to hold it. The Bank of Japan can't seem to keep their own currency strong because every single time they intervene, the traders step in it and just erase it. So here we go. Here we are again back at 160 level, 160.10. But as you guys know, because I've flapped my lips about this a half a dozen times, if there's going to be any major intervention, I would think it would be at that 161.25 level. I still stand by it. And I could be completely wrong. It could blow right through it, just kind of like what Nick said, and keep going. And if it does, great. I'll be fine with that. But just like I drew up the other day, I don't personally want to get involved with it unless it actually breaks through it. If it breaks through it, if it breaks through the daily zone and the rest of the remaining part of this weekly zone, see, we're back in the weekly supply again, even though it's mitigated. If we break above it, just like we saw with dollar CAD, let's get a close above all that nonsense, retrace, possibly get a new zone of demand, and then we could take this thing higher. So that's, I think that's going to be a very interesting area. I don't know what you guys think. Can you view daily chart EU? I am now long, trying to play the range back to about 117, says shiny yellow metal. I like the name. Let's go to euro dollar. So you said you're long. All right. Well, at least you bought down in a discount zone. Yeah, just be careful because right now you are fighting the fundamentals. I mean, ADP, JOLTS, unemployment rate, NFP, PPI, CPI, consumer confidence, retail sales, and crowd sentiment are all pointing bearish. So just be careful with that. But you're in the trade. You are at least in on a pretty nice area of demand, I got to say. Okay, we had a daily demand here where you bought at the lower part of the curve, so that's good. In fact, you got a couple zones, albeit this one down here is mitigated. There's a 4-hour zone a little deeper down, which again, for me personally, I would be using it as a take profit, not a place to buy. Let's see. Let's go back to a 4-hour. Yeah, see, this is another pretty strong looking zone of demand down here. But if you're trying to buy this thing, yeah, I mean, I'd be buying to sell. Because I would, again, just like we've seen on Aussie dollar, pound dollar, all these other ones, I'd be at least wanting to short. If I wanted to short, the closest would be right here at that 116.11 area. But again, it's kind of in that, it's kind of in this fair market value area, just like we saw on a couple of these other pairs. So I would personally be wanting to short it up higher. So just be careful. If you're buying this, you do have a potential zone of demand, zone of supply that could give you a bounce back to the downside. Even though I'm not going to trade it, there will be shorts waiting on this price point. 4-hour supply zone traders. Just be careful with that. Maybe just take what the market gives you. I mean, if I were in this thing long, I'd be wanting to take my profits right about there. We'll call that the 116 level because again, this supply, even though it is in that fair market value, that magnet area, that supply could contain enough volume, enough unfilled orders to take away your unrealized gains. And you can see on the leg out right here, as well as the second leg out, you can see the spike in volume. VSA, this is your volume spread analysis, that indicator, guys. Okay, so I would just be careful when you get back to that 116 level. That's all I'm saying. Yeah. CPI. Yeah, exactly. Yeah, and we don't have anything, speaking of fundamentals, I don't think until Wednesday, right? This week. Monday, Tuesday, as plain as it gets. So it's all about, to me, I like times like this because it means it's pure supply and demand, guys. I don't have to worry about red folder events till Wednesday. And then, but obviously we still have geopolitics to worry about. President Trump and the cussing and discussing with, continuation with Netanyahu and Hezbollah and trying to keep them from destroying Beirut. I guess President Trump wants them to do more surgical strikes if they are going to be doing strikes in Beirut. I don't know. To me, it sounds like he thinks they're doing too broad of a strike and he wants it more surgical. So who the hell knows? At the end of the day, let them be politicians. All we need to do and worry about is trade the price action. But we have to have on the back burner in all of our minds, we could either get a peace deal or the ceasefire could be completely wiped out, which I don't know. You guys tell me, does it feel like we have a ceasefire right now? It doesn't feel like it, not with all the kinetic strikes we saw over the weekend. I actually was doing a little digging just a little bit ago to get an understanding of what all happened. Let's go find it over here. Well, anyway, I can't find it, but yeah, there was a lot of nonsense that happened over the weekend, guys. So risk off move, just like what Marco said towards the end of his segment. What we got? Oil rates, not a chance. Yep, I hear you, Jeremy. Gold, yeah, let's take a look at gold because I do believe gold popped onto our bearish list. Is that right? I think that popped on earlier today. Go double check. Yeah, gold -6. Okay, gold and silver. Silver was on, I think, but it has fallen off to like a -4, -3. So let's go get gold for you. Let's go look at gold. So on gold, I have a, let's see here. Let's get my daily chart real quick. Okay, so my 8 EMA is pointed down along with the 21. That's a good look right there. That's the alligator's mouth opening wide to the downside. Nice bearish look. Lower lows, lower highs, all the teams. And we've got a similar situation to some of the dollar-based pairs we were looking at. We've got obviously our current daily candle. So far, it's given us a nice gap to the downside. If we're taking a look at this daily candle here, this would have been a possible, and it's premature to draw this up so far, guys, but this could turn into a daily supply. if this candle closes down where it's at or lower. Okay. Because the gap, if we draw it up right now, again, it's incomplete. Well, this is what our gap looks like. Our runaway gap, fair value gap to the downside, showing supply has heavily exceeded demand. And we just pushed and gapped through all the nonsense. Gap through the swing low that we had over here. You can see it. I had a drawn up demand zone. Okay, now that we know this on the daily, I'm going to go back to just a single chart look. And we can have a look and see price actually chewed all the way through this demand zone that I had drawn up here, guys. Now, this would have been a take profit demand zone. This would not have been a demand zone for me to buy. That demand zone also had a former, oh my gosh, today flew by, also had a former support resistance line going through it. So that's why I drew this up to begin with. And guess what? Supply exceeded demand so heavily, it just completely shattered through this zone of demand. So I say all that to say, if we get a close down here, and I'll end it on this, if we get a close down here, that would turn into a daily supply. And now I just got to find my second set of eyeballs. And my second set of eyeballs, I have a 4-hour supply there. The gap kind of sucks. I got to be honest. It doesn't look the greatest. So as you can see, I had a smaller time frame zone drawn up on a 1-hour chart. So there you go. There is our 1-hour supply candle. Gigantic, lovely, sexy gap on the 1-hour time frame. That would be my confluence, 44.60 level. As always, guys, not financial advice. I'm not a signal service, but definitely keep an eye on what happens if and when we return to that 44.60 area, because you are in that daily and 1 hour and basically 2 hour and 4 hour supply zone. I just think it looks sexier or prettier on a hourly. So that's where I'd be looking at. I'm going to put me an alert up there as soon as I hang up with you guys. And sorry about my squeaky chair. I still need to find some WD-40. Ladies and gents, have a wonderful week. Enjoy yourselves. Stay safe. And we'll be back same time tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.